Well, welcome everyone. My name is Andrew Stettner. I'm a senior fellow at the Century Foundation. The Century Foundation is a progressive public policy think tank. We conduct nonpartisan research and policy analysis that informs citizens, guides policymakers, and reshapes what government does for the better. I'm pleased to welcome you to this webinar sponsored by the Century Foundation and NYU. Today I'm joined by Catherine O'Regan, the professor of public policy and planning at NYU Wagner and a faculty director of NYU's Furman Center. We will be discussing saving the economy and avoiding the housing crisis in the wake of COVID-19. We'll begin with a 15-minute talk, followed by a Q&A with your questions. The way you'll ask questions is during the presentation. You'll submit your questions by clicking the Q&A button. If you have any additional comments or troubleshooting issues, click to chat to the panelists. A recording of this webinar will be made available to NYU Wagner and the Century Foundation websites. Now on to discussion. We can have the first slide, please. So obviously, everyone listening to this knows that COVID-19 is a public health crisis. But it has also triggered an economic crisis. The speed at which the virus required the shutdown of social connection and business activity was faster than any government response was triggered. And indeed, the responses that were tried in the United States to keep people at their jobs were not strong enough. So for the vast majority of US workers who are hourly workers, especially those in frontline service jobs, when their places of business were closed, they were forced to be unemployed. And this, next slide, please. This has triggered a kind of record crisis of unemployment, which I'll be talking about, and also the government responses. So in the absence of being able to maintain their jobs and for companies to get prompt help, especially small businesses, to keep their workers employed, people had to turn to the unemployment system. And just to give you a sense, this is a chart of weekly unemployment insurance applications. It used to be that 200,000 claims per week. That's where we were before this started, and 400,000 was considered bad, and the record was 600,000. We've had 22 million workers file for unemployment benefits in the last 4 weeks alone. That means 1 in 7 American workers covered by unemployment benefits have been put out of work in the last month. It's truly an unfathomable situation. So I'm going to talk about what that response looks like. Next slide. So unemployment benefits is an earned benefit to wage and salary workers. The benefits are about $372 per week, and the typical duration of those benefits is 26 weeks of unemployment. Although workers have paid into it, it's an underutilized benefit. Last year, only 28% of jobless workers are receiving help. And for those listening, thinking about how to access these benefits, I know many of you may have lost work. The process is you apply for benefits. You have to have a minimum work history. Typically, you have had to have worked in a job in this situation probably about 8 months. You have to be involuntarily unemployed, meaning you were laid off or have a lack of work, and maybe in certain situations you were fired from your job. Then once you're eligible, you have to certify each and every week that you are unemployed and available for work. And then you would get money deposited into your bank account or direct deposit. Next slide. We talked about this on a policy level. We had this system that was going to be in great need and the most well-positioned to respond quickly, but it wasn't reaching a big enough share of the workforce. It's something the Century Foundation and allied organizations have pointed out for many years in our research. And luckily, people in Congress understood this, particularly our own senator in New York, Chuck Schumer, has been working on this for a long time and said we need unemployment benefits on steroids to be able to respond to the current situation. So what was enacted was the CARES Act, which put together a series of reforms, increasing the weekly benefit amount by $600 per week, providing an additional 13 weeks of benefits on top of that 26 weeks, which won't be enough to find a job in the situation. And critically, for helping all of those workers who are left out of unemployment benefits, self-employed, low-wage earners, and part-time workers, to be able to get a benefit to get them through this crisis because they won't be able to find work. It even improved an option for employers to keep people on their payrolls part-time rather than being laid off, called work sharing. Next slide. Let me just talk about that PUA, or what I like to refer as PUA. That's the pig in Moana. Helps you remember this program and what it does. It covers workers who are not eligible for unemployment, including those in the gig economy, including student workers who may normally not get unemployment benefits because they're full-time students, even if they've been working, part-time and earning insignificant money to support themselves. They can get benefits as long as they're unemployed because of COVID-19. And briefly, what that means is they themselves have the illness or are caring for someone, they're taking care of a child whose school has been closed, or their own place of business has been closed, or one that they thought they had a job lined up and that offer fell through. All these reasons can be covered and considered unemployment because of the crisis. Next slide. So, in terms of addressing the challenge of unemployment, Congress has really acted in a more aggressive way than probably at any time in recent historic memory, probably even more than the Recovery Act. But there are a lot of challenges that remain. As I mentioned at the top, this kind of failure to keep people attached to their workplace. Be much better for workers to maintain a connection with their previous employer, maintain on payroll and benefits, and also be kind of connected when business picks up. These unprecedented claims have created very difficult delays in getting people assistance, whether people are claiming the regular benefits and also especially these expanded benefits, which launched on were passed on March 28th, but are really just coming online this week in most states. And we need to remember that it was going to be a long recovery. This is not a short-term problem, and there's a danger that we'll lose our sympathy for the unemployed. And finally, even the expansions don't cover everyone, including undocumented immigrants and returning caregivers. So that's a brief overview about what's happened with unemployment during COVID. I'm going to turn it over to Kathy, who is going to speak about the related challenge of housing.
Great. Thank you, Andrew. So I think I'm going to pick up where Andrew left off. And he's pointed out how particularly the unemployment benefits in the CARES Act provide actually quite generous federal support. But that federal support is time limited. The biggest boost actually ends in July, and there are challenges for the long recovery. So I want to argue that in the next phase, we need to include more explicit concern about housing, and particularly rental housing, to avoid adding a housing crisis to our economic and health troubles. Next slide. So COVID has made crystal clear the connection between housing, health, and well-being through a pandemic in which our primary harm reduction strategy is sheltering in your home. Public health experts warn there may be additional waves that will require similar, hopefully shorter term sheltering measures, and we need to enable people to stay housed. Housing is important for the economic recovery as well. We do not want housing instability or the mental stresses of feared housing instability to undermine workers' ability to regain and maintain their employment. The housing sector also plays an important direct role in the economy. Contraction and loss of jobs in this sector will have its own feedback effect on any recession, extending the depth and duration of economic hardship. So we want to avoid the extra harm. We should be particularly concerned about rental housing. With lower incomes and limited savings, renters were more financially vulnerable to begin with, and they're more likely to work in the types of industries directly impacted by the COVID shutdown. In addition, the housing-related protections already adopted in the CARES Act and various state and local moratoriums mainly protect homeowners. Lori Goodman at the Urban Institute has estimated that the federal forbearance on federally backed mortgages covers about 70% of homeowners with a mortgage. And forbearance delays the need to make those payments, usually until the end of the mortgage. So it is a long-term strategy. There is no such forbearance on rents. An eviction moratorium delays eviction proceedings, but rent is still owed, and rental debt continues to accrue during the moratorium. Once the short-term boosts and moratoriums end, we could expect a spike in unpaid rent and even evictions. An immediate concern is this could increase homelessness, which could undermine our public health and trigger increased COVID cases. But rental delinquencies also mean landlords would experience a substantial drop in rental income. They may not be able to cover their operating costs. They could stop needed maintenance, stop paying water bills, property taxes, etc. And we should be particularly concerned about smaller landlords who may not be able to ride out a downturn. Nationally, more than half of renters live in single family or 1 to 4 unit buildings. And the Urban Institute estimates that 88% of those units have small or mom and pop landlords. These are the landlords that may experience great hardship and exit the market fairly quickly. Next slide. Direct rental assistance is needed. In addition to continuing expansion of the unemployment benefits, we need a form of direct rental assistance to address the gaps of people who are not receiving benefits and to provide more assurance to renters and landlords that needs will be met. So how should we do that? There are lots of policy discussions on options, but foremost, we need to prioritize speed. We need to act quickly before a housing crisis exists. And speed means we need to use existing vehicles rather than building something from scratch. Of course, any existing program will need to be modified to fit the current crisis, much as the CARES Act builds on unemployment insurance and then it modifies and adds kind of like a sidecar in order to fit the current crisis. And as we've seen with the unemployment challenges and glitches that Andrew was talking about, radically scaling a program poses challenges. Those challenges might be eased by using a multi-prong approach. So employing several complementary vehicles as delivery mechanisms. And that could actually be an example of the relationship between the unemployment benefits and the payment protection program, the paycheck protection, right? They're both about 2 different ways to help people keep their incomes. I'll end with it there, Andrew. Thank you.
Thanks so much, Kathy. You know, so we've passed April 1st and we're bearing down on May 1st. Where do you think we are at with people paying their rent, especially, I'm getting a lot of questions about this because of the delays in unemployment benefits.
Yeah, it's a very good question. I'm a researcher and I need to start by saying there is no real-time resource on national data for rental payments. So there were numerous predictions. I'd say the predictions about the share of rent that would go unpaid in April went from 20 to 40%. There are incomplete sources. I think what we saw is at the beginning of the month, probably the best estimates from the National Multifamily Housing Council, we saw a drop in rental payments, but it picked up in the second week. And probably the best number is about 84% of rents were paid as of April 15th. Now remember, April, most people were working most of March, right? So as you said, the big concerns are about May, that next time rent comes due and you've had at least a month of disruption. That's where people are particularly concerned, and the counterweight was supposed to be all these benefits hitting the ground. So in May, what we expect to see with rents really depends on whether people are able to access those resources that are in the CARES Act. One thing I do want to point out is I'm talking about rents on housing and not paying those, but rent delinquencies for commercial tenants may be even higher, like all those businesses that have been shuttered. And some housing is in mixed use developments, and so you've got the double whammy of not having rents from some tenants, but not having it from maybe your biggest source of revenue, which is your commercial tenants. So a lot of holding breath and hoping that the UI glitches get fixed. So I'm going to ask you a question on that, sort of to my mind, in looking at how the unemployment benefits are playing out. The CARES Act sets up a big apparatus of what states can do, but they don't have to do it, or then they have to implement some special features. Are you hearing things on the ground about some states being unwilling to expand benefits, or is the main issue that we're running into really technology and capacity issues for getting the checks out?
I think right now it would put it more in the category of technology and getting the checks out, with a few exceptions here or there. The bigger worry is as states begin to open up or partially open up, you are hearing people complaining about the generosity in some of the conservative states, worried that construction businesses, others won't be able to get workers, given that the benefits are very generous. And Senator Lindsey Graham just was outspoken about this and just did another video press conference about this issue. So Kathy, let me put it back to you.
Yeah.
I would say, I think, I think right now people are very sympathetic to the unemployed, given that it really is without people's control. But historically, it's been hard to maintain that sympathy. So we're certainly concerned about it and have heard about it, not so much in New York, but more conservative jurisdictions, even places like Ohio that you might consider as being more middle of the road. So now I think many people will get their first unemployment check before May 1st, but not everyone will. So can you just talk a little bit more about what actions need to be taken, and please include some things that could be taken on the state or local level, because I am worried that the federal government will not make any additional actions unless they're, don't require legislation before May 1st.
Yeah, so this wasn't quite a quick one, but at the federal level, states are going to are entering a fiscal nightmare, and much like we don't want a housing crisis added on this, we do not want the states pulling back from their necessary basic services during this time period. And so there is the need from the federal government to come in and help on the fiscal relief. But state and localities have a big role to play here. They can be more nimble than the federal government. And so if you look at how the CARES Act lays out, there are gaps. As you said, there are gaps, and local money can be used to fill those gaps. And I know some localities are specifically looking for some of their using local dollars to cover those who don't get covered by the UI. But there are other ways that they can jump in, right? So they could be opportunistic on the housing side. I know some places are trying to be a little forward looking and are thinking about purchasing some of these bargain price hotels that could be available to help them beef up the shelter system for homeless, which is now covering too much and kind of in a tough place. So I think we're going to learn a lot from the places that are innovative, but there are other actors as well. Philanthropy's been jumping in as they are needed. I would add to that list of private actors, landlords, right? So we are hearing a lot about negotiations between landlords and tenants across the board, either rent discounts or payment plans. And I think as we try to picture how we're going to reach those who are not getting the resources from the federal level, the landlords are part of the front line of defense, right? So they know the people who are unable to pay the rent. And so I think we want to think about them within both the knowledge network and ways of delivering patchwork help for where the biggest problems are.
Great. Thanks so much, Kathy. I think we're going to turn to the audience, and my colleague Amanda Novella will be moderating the Q&A.
Yep, thanks everyone. We have one question here about the immigrant community, and someone wanted to hear, I think from you, Andy, about whether or not they're covered, what the prospects for UI are for international students and undocumented individuals.
So great. You know, the unemployment benefits that have been passed at the federal level are available to those individuals who are work authorized in the United States, you know, including those with green cards or statuses like DACA. Those who do not have work authorization, allowed to talk. California is an example of a state that has put in state-funded aid for undocumented unemployed individuals because the federal programs do not cover them. And I think that's a great advocacy point.
Great. We have one here for Kathy about affordable housing. And I think the question is just what can we expect, especially now that we have historically low interest rates in terms of housing supply, new housing, and if you've heard anything about plans for more affordable housing.
Oh, I love a question from an optimistic audience participant. I would love to think the interest rates are going to drive more. And so maybe that's a thing for us to be thinking about. So my concern, so a couple of things, that the federally funded affordable housing has an eviction moratorium on it. So the tenants in that housing are receiving an additional protection during this time period. In terms of supply, I think it's a really important point. Right at this moment, as housing markets are a little bit in a freeze, we're not doing construction, deals are falling through. One of my concerns is that we won't look to the longer term. We'll forget about supply, get out of this issue, and we'll have worse of an affordable housing problem than we had to begin with. And so this is a place where, again, it might be state and local governments thinking about ways that you can make sure some of the deals in the pipeline that are vulnerable during these couple of months actually hold together so that we don't have an impending decrease in affordable supply. But to end on the optimistic note, imagine what might happen, and that some housing assets are going to deteriorate in value, and it could be a time to purchase housing and lock in some long-term affordability. So for the areas that can think past this near-term crisis, there could be some opportunities for improving the long-term supply of affordable housing.
Great. So I think this next one has some crossover for both of you. One person wanted to focus in particular on the circumstances that students find themselves in right now in terms of housing precarity, but also in terms of uncertainty about employment prospects.
Well, I don't know who you want to start first, but I'll just jump in. And so this is a high priority for the Century Foundation to help students and young adults access support. We do think the pandemic unemployment assistance program could cover a lot of students, students that were in the job market, had a job offer, for example, who are working part-time at a local business, who lost that job. We really want those students to get assistance, and there was a proposal, in the House of Representatives for the CARES Act that didn't make it past the Senate that would have basically covered all graduating college students and high school students. We are, gathering support for that proposal in the next wave of COVID relief.
Right. I'm afraid here I don't have something optimistic to add on this, I would say that youth housing, student housing, and youth homelessness is a real gap in the pre-existing system that we had before we got to the crisis. In some sense, the housing challenges of students have been going under the radar for a while. A shocking number of high school and college students were already housing challenged and potentially homeless. And so this is a place for having the long list of red flags of where you might see an area that something that was not doing very well might become much worse. I would put on the student and young adult side. I'm happy to be thinking more about what proposals should be put forward, because this is a place where you could do some long-term damage, a lot of long-term damage from a short-term crisis.
Yeah, so this next one is talking about whether or not there will be money, either if there has been money in recent relief packages or will be, that can be used for state-run rental assistance programs. And relatedly, I'll just do a 2-for-1.
Yeah.
What impact do you think this crisis will have on recent or upcoming changes to regulations specifically in New York, since a lot of viewers here are in New York?
So why don't I start? This is a housing question. So the CARES Act did include some money and coming through disaster channels. The Community Development Block Grant Program is one of the more flexible programs when it's in its disaster relief form. And HUD is currently, a good thing that was done in the CARES Act was a recognition. So this is an example of taking an existing vehicle but modify it for the current situation. The federal government through HUD gives out disaster relief. Disaster relief is under a natural disaster in which the formula that's used for it is based on like the damaged housing in a particular locale. So HUD has to come up with a whole new formula for devising this that it's working on for a pandemic. So they're currently working on it. That money is flexible and can, unlike the typical CDBG money, it really can be used for rental housing, and there's a lot of push for that. The hope is there'll be more money through those type of flexible programs, including HOME, which is another HUD program. In terms of New York City regulation changes, I'm not sure that I'm up on specific regulatory changes. I can say that HUD on April 13th, and HUD is a big funding stream, so a lot of the money that comes through New York City, HUD issued almost blanket waivers and regulatory relief in implementing its federal programs, vouchers, public housing, et cetera, in order to enable places to continue implementing their funding streams that they have. It's voluntary, and so it's a real question on which places will do what. My hope and expectation, New York City is going to take those flexibilities and run with them.
Great. Well, I want to thank Kathy for joining this webinar and sharing your wisdom. I only wish we would have had more time to talk. I'll be following up with you, I'm sure.
I would love to chat.
I am going to stay on to take a few more additional questions, but I do want to take this moment to thank all of you for joining this webinar and encourage you to follow, of course, the Furman Center, the Authority on Housing in New York, and the Century Foundation and our COVID-related resources. We are going to make a recording of this event available on both the NYU website and the Century Foundation, and you can visit wagner.nyu.edu or tcf.org for more updates. So thanks so much, Kathy, and Amanda, I will be staying on for a few more minutes to answer some more questions for those who can stay on.
Great. Thanks for your extra time, Andy. There are a couple more questions for you. So I know this question is asked a lot. Can you speak a little about how UI interacts with or applies to gig-based work? Someone asked if you're able to get UI. They know you don't typically qualify, but if that has changed.
Yeah, so that's something that's been really evolving and a bit confusing. So I'll try to take a minute to clarify it. So those who are working, for apps like Uber or Postmates, Shipt, etc., the authors of the CARES Act really did want you to be able to get assistance if you're unemployed through COVID-19. There's been some back and forth with the Labor Department, but now it seems like, they're going to give states the leeway to cover gig workers. So if you were working on an app and can't work on the app because of COVID-19, your own illness, illness of a family member, or because there's not that much business on the app anymore because of COVID-19, you can file for pandemic unemployment assistance. You'll have to provide your own information about your work history, but you should be able to get the minimum benefit plus that extra $600 in additional compensation.
And this should be a quick one, but it's kind of a follow-on question. I think someone who has done freelance work is wondering if getting UI benefits interacts at all with your ability to get loans like a mortgage.
The UI, it wouldn't be looked at as a negative credit, challenge, for, getting a mortgage. In fact, if you're, already in the process, it may be considered a stream of income that you could use at least temporarily to make mortgage payments, maybe along with another household member.
Great. And I've seen a similar question pop up a few times, so I'll ask one of the versions. It's been argued that the Federal Reserve Bank's actions during the '08 crisis increased wealth disparities over the following years. With the Fed taking similar actions now, like buying municipal bonds and junk ETFs, do you feel fiscal authorities have a responsibility to prevent similar effects that those actions had last time?
I think there's been a lot of discussion about this, and even in the Paycheck Protection, some attempts to, prevent stock buybacks, even some discussions of preventing, dividend, payouts. I think the Fed's, actions have worked to shore up the economy, but they haven't yet paid attention to addressing inequality.
Great, thanks. So I know we've talked about some of the ways that Congress has kind of put a patch on the economy during this current crisis, but given that some people might say that the economy of even 2-3 months ago, some people said it was strong, but it's not necessarily an economy that we want to go back to. I think Kathy said before, even like 20% of renters weren't able to pay their rent on time. So this is not something that we want to go back to. I'm curious, kind of, this is a big picture question, how you think about kind of building something new that works for more Americans and not just thinking about putting a patch on what we have now.
I think, in what we should gain from this crisis, if we can gain anything, is a sense of worker power to push back against, cuts to not just unemployment benefits, but worker safety, making sure workers are paid additionally for working during this time, and then try to move into a recovery period, which is hard to imagine, right now, but try to build an economy that is environmentally sustainable, that has the right infrastructure, that has good jobs. It's my belief and other economists that we're not going to just turn the lights back on in this economy and go back to where we are. We're going to have to rebuild it. And remember, the work is, really just starting. Even though we've spent trillions of dollars, the work is just starting to rebuild an economy that has really taken a mortal wound that won't be healed until we're able to control this difficult epidemic.
Thanks. A couple of people have asked about what's going on at the state and local level and what state and local governments are able to do in this moment. So maybe first talk about that, and then other people are asking, what are the recent relief packages doing to support those efforts?
Yeah, I think, states have been in the front lines of battling, COVID in a large state with the lack of federal leadership. It was really states on the unemployment piece that, figured out the ways to start covering people who may not have been eligible based on old rules, and helped to agitate, for the kind of expansions, that we received. The barrier for states in terms of the economy right now is their lack of fiscal space. States cannot borrow, for the most part, so they rely on federal government, and they're being pressured already. Los Angeles has announced major cutbacks in services because of a lack of tax revenue. So they're really constrained when it comes to dealing with the economy. That's why it's so important to have the federal, help to give tools to states and localities to have the flexibility to battle the economic side of this pandemic, putting the health part aside, where the governors have clearly been the leaders.
So I think we have time for one more question, and I like to end it on this note because at the Century Foundation, I'm sure many of you like to think about how crises impact people in different ways in terms of race and gender. So I think someone would just like you to comment on how the economic impacts of COVID are disproportionately impacting different groups. And if you will, maybe how we can support them.
So, sometimes we call the 2009 Great Recession the man session because of its impacts on manufacturing and construction. And that was no outlier. Often those are the jobs that are the most vulnerable. And in a way, the service sector jobs that are more female dominated tend to be, or in the past, considered recession proof. And that has been reversed. These frontline service jobs that require close social distance have been the first in the chopping block. It was leisure and hospitality, thus your restaurants and your hotels, that lost the most jobs in the month of March. So it's frontline workers, women, low-wage workers, predominantly, disproportionately workers of color that are impacted. And because of the kind of racial nature of the economy, those are the workers that have the least in the way of protections, whether it's paid leave, whether it's decent health benefits, so it caused a greater, level of insecurity than even past economic, downturns. And that's where a lot of the focus has been on in terms of, that's why we've been focusing on new requirements for all employers to treat the workers, fairly, so we don't, worsen these racial and gender divisions.
Great. I would like to apologize to anyone who asked a question that we have not been able to address at this time, given the limited time that we have together. But I would like to offer thanks to everyone for coming. Thanks to Andy for staying on and answering questions. And Andy, did you want to say any last words?
No, thanks, Amanda, for moderating today, and thanks to NYU for organizing this opportunity. We hope folks will keep tuned in for the latest information.